Central banks are your enemy. Central banks only exist to take money from you and to divert it to the politically connected. Go on your own personal gold standard. Go on your own precious metal standard. You can be your own central bank.
Please join us for our next live stream, Sunday, June 13th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, June 13th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you're new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up if you like what we do. Nick Giambruno returns today. Nick is the chief analyst at KC Research, including its flagship advisory, the KC Report. A contrarian speculator and financial and geopolitical commentator with a special focus on value and crisis investing, Nick specializes in unearthing undervalued markets around the globe. And we are delighted to have Nick return once again. It's time to saddle up and silver up for Nick Giambruno. Nick, welcome back to SBTV. How are you doing?
I'm doing great. Great to be with you.
Glad to have you back, Nick. Really do appreciate it. Where in the world are you at this week?
Well, I'm in a non-disclosed location in the middle of the Andes Mountains in a rural part of Argentina. It's kind of been the perfect bug-out location for during all of this insanity, this hysteria that's just swept the world. So it's been refreshing to be out in the middle of nowhere.
Not so much bug issues there. I mean, you're free to just kind of do as you please still.
Yes, the government here basically leaves you alone out in the rural areas. Basically lets you do as you please. I think that's not just unique to. I'm in Argentina at the moment, but that's not just unique to Argentina. I think I talk to colleagues, friends, and family around the world, and they are all kind of thinking the same way wherever they are. In many different countries, we're looking at more rural areas where they have more freedom, less restrictions, less regulations, and they can just get on with their lives. So I've been seeing this trend worldwide.
Yeah, amen to that. That'll be the day. Oh, but Nick, obviously the world has changed since we last spoke, I think about a couple years ago. And part of the change, besides the pandemic, is increased Fed intervention in the markets along with the ongoing pandemic crisis. As someone who specializes in crisis investing, how does an investor navigate through an obviously disconnected market?
Oh, it's extremely difficult because what you're looking at, because of the distortions, it's not really a market. You have this entity, the Fed and central banks all around the world, that distort everything. How in the world can you measure value when the thing you're measuring it in, the dollar, the euro, or the yen, or whatever, the fiat currencies, is constantly changing? It's constantly losing value. It's like trying to, build a house with an architect and the ruler is changing. How are you going to build a house? How can you know, how long a room is? I mean, it's the same kind of thing with investing because the measuring stick, we don't have a measuring that's pretty profound. That's a very simple truth, but not very well understood. There's no measuring stick of value. How the hell do you invest in that kind of a situation? So it's very difficult. You have to understand the distortions. You have to understand where you can find value, even though it's difficult to measure. And it's possible to do, but it's extremely difficult in even normal circumstances in a fiat system. But these are not normal; these are extraordinary circumstances. So everything is warped. It's like when you go to the circus and the fun house, and you look at the funny mirror and you go through the fun house. It's like things don't appear how they're supposed to be, and the rooms look all weird. That's kind of what the financial markets are in right now.
Nick, the Federal Reserve recently said it would begin the process of unwinding $13.8 billion in their corporate bond portfolio that it amassed during the COVID-19 pandemic. $13.8 billion in a sea of trillions. Is this really going to offset anything?
No, it's not going to do anything. And I think it's always important to put stuff into context too, because a trillion is such a huge number. So I like to put it like this. 1 million seconds ago was, I think it's 11 days ago. 1 billion seconds ago was 1989. But 1 trillion seconds ago, that's 30,000 BC. So imagine that times like 28, and that's the national debt of the US. And it's even worse than that because that doesn't include the unfunded liabilities and the off balance sheet stuff. So I mean, a trillion is you can't even wrap, most people can't even wrap their minds around how big a trillion is. Yet we're talking about a trillion here, a trillion there, the deficit. I mean, Joe Biden just came out with a $6 trillion budget. That's insane. 6 trillions. So when they're talking about, oh, they're going to trim 12 billion, 13 billion, it's completely insignificant. What is significant is the amount of currency debasement that they are engaging in for various reasons, for spending, for this COVID stuff, stimulus. They are debasing. This is the biggest monetary explosion, I think, in world history. When you look at what the US is doing, what all these other countries are doing, the aggregate amount of money printing, it's unprecedented.
Yeah, I mean, do you feel that all this money printing going on, and also the weaponization of the dollar, things like that, do you think it is really finally pushing other countries away and off of the US dollar?
Yes, I think, that is the long-term trend, and it's playing out faster and faster. I think just this week, the Russian sovereign wealth fund said they're going to divest from dollars. So no, I mean, yeah, fiat currency in general, but the dollar in particular, because it has all of this political risk attached to it. Yes, I don't think these things have a long shelf life. I think by the end of the decade, maybe even sooner, these things we're going to have something's going to happen. Like they're going to need to reset the international monetary system. There's going to need to be confidence restored because they're going to I think by the end of this decade, maybe much sooner, they're going to all countries are going to destroy confidence. The way they're going, they're going to destroy confidence in their currencies.
Yeah, Nick, that's a good point because when you say reset the monetary system, I believe, can they just simply reset it, or do they have to excuse me, do they have to look at something like everyone needs to start back at zero again, and are we going to see a lot of people being wiped out?
Oh, yeah, certainly you'll see a lot of people wiped out. I mean, it's a wealth transfer because people who are holding their money in this toilet paper, this fiat confetti, people who are holding their life savings, that is a wealth transfer. That wealth is going to be transferred to somebody. Who is it going to be transferred to? Well, it can be transferred to you if you hold the right assets, but it's also going to be transferred via money printing. They're extracting wealth from savers. It's a scam. Money printing is theft. I mean, this isn't about stimulating the economy. Not that the government should stimulate the economy in the first place, but it's not stimulating the economy. They're stealing. We got to look at. I think it's very, very, very important to use accurate words, accurate terminology, and don't adopt their language because their language is propaganda. They're not stimulating the money, the economy, or engaging in quantitative easing. They're stealing. It's theft. They're taking money from people without their consent and diverting it to them. That's called theft. So I don't like to use their fancy words and terminology that they cloak it with all these graphs and charts and jargon. You got to look at the first principles. What are they doing on a first principle? They're stealing. This is not good. So no, I think it's terrible. So what are they going to do if this thing has a shelf life? The dollar, the international, and it does have a shelf life, and it's going to end. What are they going to do? You can kind of see they've hinted at what they want to do. They want to double down on fiat currency. They want to do the IMF SDR, which is like a fiat currency built on fiat currency. It's a basket of fiat. It's a terrible idea. This is what these guys want to do, or they want to go to a digital dollar. They want to go to a digital currencies that can make it even easier for them to steal by inflation. So this is where they want to go. Whether they're going to get to that destination or not is uncertain, but that's where they want to go.
Some great points there. The last time you came on, you gave us a quote from Baron Rothschild where you said the best time to be buying is when blood is on the streets. Now, in terms of investing opportunities as a result of the current crisis and what the Fed is doing, what you're seeing right now, can you take us through some of the most significant value opportunities in your view?
Yes, and like I said before, it's really tricky because how do you measure value? It's very, very, very tricky, and especially in a world where where central banks are printing money at an unprecedented rate. So it's that in and of itself is difficult. But Yes, that is true. The markets are swing in very wild directions. I mean, you look at the tech stocks in the U.S. and the multiples and the valuation these things trade at completely insane levels. You look at these startups that are raising, tons of money that have no business potential. So that's kind of one end. I mean, it's total froth, total top of the market stuff. However, people don't realize that at the bottom of the market, things can get just as crazy on the other end. They can get crazy cheap instead of crazy expensive. So I try to look out for situations that are crazy cheap. And you have to have a global view to do that because you got to go around into some weird places. Um, but right now, it's difficult, and also you can't just buy things that are cheap because you have to have a catalyst to see. They could be cheap for 20 years, or longer than you can, longer than you're going to be alive. So you got to find things that are not only cheap, but that have a chance of getting better in the future. So right now, I wouldn't want to touch general stock markets in the U.S., Europe, anywhere, basically, with a 10-foot pole, because all this money printing has distorted it. I'm waiting for something where there is a true disaster, and then you can go and look for things if you can see a catalyst. So where is that right now? I don't really see any broad geographic place that fits the bill there. Unfortunately, it's just so distorted from the money printing. I think the only place you can find any semblance of value in the markets today are in commodities. And those are already starting to go through the roof. I mean, look at what's happened to lumber. Look at what's happened with, all certain types of base metals and gold even in the last year, and silver too. So, I mean, these things, the money printing is starting to creep into that. And it's already starting to take off. So it's not at the bottom. Uranium, look at uranium. So I think commodities as a whole is really the only place I see any value in this market at all.
Despite gold hitting all-time highs last year, would it still be considered cheap relative to what we may see coming down the road?
Yes, I still think it is. I still think it is cheap compared. So, I mean, you got to look at it. How do you value gold? I mean, that's a tricky thing too. Not only how do you measure the value of gold, but how do you actually think about the valuation of gold? And you got to look at. I look at it in terms of its competitors. I mean, gold is simply money. So gold is competing for the role of money around the world with fiat currencies, with other monetary goods, silver, Bitcoin, and so forth. So gold is looking much more attractive. So if you look at all the demand for money in the world, you can kind of distill. Look at the money supplies of most economies. I think it reaches something like $40 trillion. Don't necessarily quote me on that. But if you look at the M2 money supply of all the countries in the world, it's in that ballpark. So gold is about $11 trillion. So I think gold could very easily double and more from current prices, because it's going to eat up that demand that people have for money. And money isn't a complicated thing. Money is a very simple and intuitive thing. What is money? It's something that's useful for storing and exchanging value. That's it. You don't need to have these complicated charts that the Keynesians tell you about the money supply and GDP. No, money is something that's just easy, that is useful for storing and exchanging value. And gold has been traditionally the best thing throughout history at storing and exchanging value. So that's what we're looking at. We're looking at a competition in the market of storing and exchanging value. And gold, I think, will shine because it's going to be apparent that it's going to be better at storing value, better at exchanging value than these currencies that are being rapidly debased.
And Nick, how about silver? Silver, it's still roughly just a little bit more than half over its all-time highs. Do you still have that same sentiment for gold as you do with silver?
Well, I think gold is a superior form of money over silver for a simple reason. But silver doesn't have it's not like copper. It's not a purely industrial metal. It's primarily an industrial metal, but silver does have an important monetary component to it. So during times when the monetary situation gets crazy and there's a lot of inflation, you see obviously gold go up. What we're talking about here is a monetary phenomenon with people panicking into other alternative forms of money, primarily gold and silver. So that's why when you see situations where the money is being debased, the fiat currency is being debased, as you saw in the late 70s and early 80s, people will stampede into alternative forms of money, gold and silver. Silver still has that monetary role. And when these things happen, and I think we're having a setup that's going to be even bigger than the late 1970s and early 80s. This setup, the money printing that's going on now dwarfs whatever happened, back in the 80s. So I think, I think the monetary situation is setting up for the price of silver to spike because of its monetary. I think it has about 20% something monetary use, maybe more or less. But the monetary situation, we have a setup where there is going to be an explosion of demand of people looking. I mean, what's going to send silver higher is not its industrial use, in my view. It's going to be its monetary use. That's what's going to really cause it to spike. It's not going to be the industrial. That's just my view is that the monetary component of silver is going to be the catalyst for what drives it higher.
And you've also been reminding investors that when people talk about gold and silver as hard assets, hard doesn't mean tangible. Can you explain further to us what you mean when you said that hard doesn't necessarily mean tangible?
Yes, that's correct. That is a common misunderstanding. Hard means hard to produce. And in contrast, easy money is easy to produce. It's as simple as that. You can think of it, I like to call it resistance to inflation. So a hard asset is one that is resistant to inflation, or it's hard to produce. That's what makes it a good store of value, which makes it a good form of money. It's that kind of progression and logic. So that's how I see it. So yes, how do you measure? And this is something this is something you can easily measure. How do you measure resistance to inflation, or how hard it is to produce? There's something called the stock to flow ratio. It's the inverse of the supply growth. Basically, you look at the stockpiles of something, and then you look at how much is being added to it each year. So gold gets about 1 to 2% growth each year. Why is that? So I think this is very, very important and very instructive. So why was gold always the best form of money? Because in my view, it's the one commodity that's most resistant to inflation. It's the most resistant to inflation. And that is because gold's stockpiles have built up over thousands of years, and they're indestructible. So the gold that the pharaohs had in the pyramids, that's still with us. It's indestructible. It's basically indestructible. I mean, you have to do some really powerful explosions. It's not going to naturally corrode. Gold is going to be gold unless you put it in a nuclear explosion or something crazy like that. So gold basically doesn't corrode. What did that do? That means the stockpiles of gold built up over thousands of years, and relative to production, that makes current production insignificant relative to the existing supply. That's a very, very, very important monetary attribute, because that means it's very hard to inflate that supply. So you look at all that gold, all the gold supply in the world that's built up over thousands of years. That's why it's very hard to inflate, because the current production is insignificant compared to that stockpile. I'll just say there's a very easy way to understand this too. Look at platinum and palladium. Platinum and palladium are actually scarcer than gold, but they're not hard assets. Why is that the case? It's because their stockpiles haven't built up over thousands of years. Platinum and palladium have only been produced for a couple hundred years. And that means that the annual production of platinum and palladium is basically equal to the stockpile. Can you imagine if there was that doesn't make it a very good money. That means its value is heavily dependent on the industrial use and annual production. So if production is very high one year, it could devalue the stockpiles. So this is why platinum and palladium, in my view, they're primarily industrial metals. They don't have that monetary attribute. Gold has that monetary attribute in that, production is probably not going to be more than 1 or 2% this year. So it's not going to be easy for anybody to inflate the supply. Platinum and palladium don't have that feature. That's why gold is the best money. Silver is the second best because it has that feature, but it's not as good as gold. I have to see exactly. I think gold, it's 1 to 2%. I think silver, I don't know. I have to look up the annual production of silver in relation to silver stockpiles, but certainly higher than 2%. So that's what makes gold a better form of money, because it's very hard to inflate. Conversely, that's also what makes silver a good form of money too, but in a much lesser regard than gold, because gold has that feature.
Okay, inflate. You were also reminding us not to confuse inflation with rising prices and the CPI figures, which you pretty much describe as a worthless statistic on Twitter. And you've reiterated that investors must not confuse the consequence and effect of inflation with the cause of inflation. Can you help us with that as well?
Oh, yes. This is actually, most people aren't aware of this, but if you look at dictionaries, not even that old, dictionaries from like 20 years ago, Webster's would define inflation as an increase in the money supply. Then in about the mid 2000s and other places as well, other dictionaries, they redefined the word inflation to mean a rise in prices. This might seem like a subtle change. It's not a subtle change. It's an enormous change because what it's doing, this is like redefining a robbery to take out the robber. So like you can just say like, oh, I lost my property, but then you take the robber out of the equation. This is what they're doing. They're sneakily, because when you define inflation properly, inflation is properly defined as an increase in the money supply. It has been since the beginning of when before economics were corrupted by politics. If you look at true free market economics, there's no controversy. Inflation is a change in money supply. It's only when politics got introduced into economics that they tried to weasel their way out of this definition. Why? Because they wanted to give themselves more latitude to print money. They'll say, oh, printing money doesn't increase prices. It's a CPI. You have to look at the CPI. You have to not look at the money supply. It's misdirection. The thing is the people who are doing this are not engaging in like an honest debate. They're engaging in subterfuge and trying to trick people with confusing terms and changing the meaning of words. It's not a good faith argument. It's a bad faith argument, and they're doing it deliberately to mislead people. So that's what I say about inflation. Inflation is a change in the money supply. You have to think of it this way. CPI is ridiculous. I mean, even if you can, let's put the fact aside that inflation is a change in the money supply, and let's say it is the CPI. Let's take their argument, CPI. How do you measure CPI? The thing is that a bunch of bureaucrats decide what's going to be, they cherry pick things that are going to be in this basket of rising prices. And you know what? Nobody has the same basket of goods. Do you have the same basket of goods as your wife or your brother or your father or your neighbor? Everybody has a different, or somebody who lives in a different state. Do the people in New York have the same basket of goods of the people who live in Nebraska or in Florida or in Texas? So the idea that you could distill a basket of goods down for the entire country, it's patently ridiculous. I've heard it likened. It's like saying taking the average weather temperature and using that to see what you're going to wear for clothes today. So it's like, oh, let's take the average of the temperature in Hawaii and in Alaska and in Texas. Take the national weather. That's what the CPI is like. It's a completely meaningless statistic. It's worse than meaningless because it's used to mislead people. And the thing is that if you ask 99% of people what inflation is, they'll tell you it's the CPI because that's what everybody learns in college or what they regurgitate on CNBC. But it's a gigantic farce. It's an enormous farce. But you know, it's for people who understand it, it's a blessing in disguise because it's an information asymmetry. And if you really want to make money in the markets, you got to look for information asymmetries. Because if you're going to look at something that everybody else understands, you're not going to make money. You have to make money by going to things that are misunderstood. Inflation is hugely misunderstood, and that's why I see a huge opportunity in gold and silver.
That's a great point. You know, Nick, also recently we've seen central banks buying gold through the Bank of International Settlements, causing the premiums to rise at the Bank of England, where 1 million ounces were bought recently. When we see central banks going into stacking overdrive, what should this mean for investors?
It means you should become your own central bank because central banks are completely worthless. They're useless institutions. They only exist. They're not your friends. Central banks are your enemies. Central banks only exist to take money from you and to divert it to the politically connected. There's no other purpose for a central bank. So I would say go on your own personal gold standard. Go on your own precious metal standard. And don't wait for these guys to do it because by the time these guys start doing it, they're going to drive the price up. So do it before them. And like I said, just how they manage their reserves with gold and precious metals, why don't individuals do that? You can be your own central bank is what I would say.
Yeah, it's another great point. And you wrote on a Casey Report article stating that you foresaw big changes to the monetary system ahead. And you wrote, and I'll quote here, all commodities are cyclical. They go through cycles, but I believe this is something different. Gold is riding on an enormous fundamental trend, and gold is coming back to the center of the international monetary system, end quote. will gold be coming back to the center involve, let's say, a financial crash ahead, or do you see this fundamental trend playing out more smoothly?
Here's what I see happening. I see the current system, the fiat system based on the dollar centric fiat, global fiat system, the petrodollar system, more accurately. I see that falling apart. And I see, look, you got to remember these central bankers, these elites, the government, they always have in their back pocket, kind of like a plan B, gold, going back to gold. So if they need to if they've destroyed confidence in this system, and the confidence doesn't deserve to be there, if that confidence is lost, they always have it in their back pocket to go back to gold because they have gold reserves. They could, that's that. They don't want to do that. They don't want to do that. But if they're forced to do it, they can do it. And that's what they'll do. Rather than lose power completely, they have that card to play. But before they play that card, they're going to play a card that they want to play. And that was what I was talking about earlier. They want to make digital currencies. They want to make the SDR, which is so they're going to try to do this. This is the question. This is the $64,000 question. Confidence is going to be lost. That's a given. Whether the question is whether they're going to be able to play the SDR and digital currency card and get away with it. And if they do, that has more implications than just finance. That's terrible for humanity. I hope they don't. I'm an optimist. I hope they don't. So if they play that card, and they are going to play that card, they're going to try. They're going to play that card. If that card fails, then they have no choice but to go back to gold. Because the other alternative besides at that point is they lose power, and these governments will just disintegrate. So that's why they have that gold. Gold is kind of their emergency backstop. So that's how I see it. It's going to be a battle to see if, like I said, I'm an optimist, but I'm also a realist. I've seen what's happened with this COVID hysteria that swept the world. And if governments say, hey, you have to turn in your physical cash and take a digital currency, and you know what, we have to use the IMF as the global central bank, I think most people will sheepishly accept it, unfortunately. So we'll have to see what happens. That's how I see it playing out.
Yeah, you brought up an interesting point there, because when you talk about the SDR, it is a basket of fiat, a basket that has the US dollar, the euro, the pound, the yen, Chinese renminbi, gold, maybe missing one or two. But how does the SDR come into play when you are going to have failed fiat currencies such as the dollar, such as the euro, perhaps even such as the yen, such as the pound? I mean, these Western fiat currencies, they aren't going to make it. So how does an SDR come into play?
Exactly. So no, I think that's the hope, is that yeah, I hope they don't come. I hope it doesn't come into play for the reasons you just described. But I think they will try to push the SDR before things get too out of control, is my hunch. So before these currencies really, people lose confidence in them. And this is a hard thing because you can't measure confidence. How do you measure confidence? You can't measure it. It's not a quantitative measure, but I think they have a feel for it. And I think if they start to see that people are losing confidence in the dollar, the euro, then they will get together and they will try to push this thing and say, well, look, the dollar's not doing too good, so we better, make this global central bank thing. And people won't use SDRs like they use dollars. It'll just be like the global reserve. They'll try to replace the dollar, like how countries use the dollar as a reserve currency. They don't people in China don't necessarily use dollars day to day, but their central bank holds a lot of dollars on reserve. Instead of dollars, they'll hold SDRs. And China's on board with the whole SDR thing. That's a real boost for them. So that's not a good thing. So I hope, I can see this coming. This is how I see it happening. And I hope it's defeated before it becomes a fact on the ground. But you're absolutely right. That's their balancing act. They have to try to switch to an SDR before the total confidence is lost. So I don't know if they'll do it. I hope they won't.
Yeah. So I guess our choices are SDR or digital currency. Well, see what happens. In another of your Daily Dispatch pieces, you said that people get all hyped up about democracy. But all it is two wolves and a sheep deciding what's for dinner. And the combination of democracy and fiat currencies leads to a very predictable outcome. And you used Argentina as an example of that predictable outcome. What is this outcome that you're referring to?
Oh, it's very simple. When a democracy, majority rule, it's not a good thing. That's the tyranny of the majority. What you want is a system that enshrines the individual and individual rights. It doesn't matter if 99% of the people vote to have a windfall gains tax on gold, for example. Let's say gold goes to $10,000, and everybody says, well, these gold investors have to pay their fair share. And what if 75% of the country say, hey, yeah, you know what, those gold investors, they should pay a 99% tax on those gains on gold. They didn't deserve that. That can happen in a democracy. That cannot happen in a system that respects individuals and private property. So yes, democracy is a horrible system, terrible system. And if you look at the founding fathers of the US, they would be disgusted by what happened to their country. They never liked democracy. They wanted to enshrine a system of checks and balances that protected the rights of the individual. So no, majority rule is a horrible thing. And Argentina is a perfect example of that, because what happens in Argentina is that when you have the system of democracy, who's going to win? The person who promises the most freebies is going to win. It's like, who's going to win against Santa Claus in the election? So that's what happens here. Oh, I'll give you free this, free that, free everything. And then how do you pay for this stuff? Well, you go to the money printing. And then what happens there? You make inflation and you destroy the currency. And then you know what? What is bad is that once this mentality gets embedded into the culture, it's impossible to get rid of. It's taken root. And Argentina is, again, another example. How many times have they been? You would think that smart people, they'd be like, okay, we tried this money printing for freebies and it destroyed the currency. It impoverished a bunch of people. Let's not do this again. That's not what happens. What happens is the cycle, it just starts up all over again. So Argentina has been through like 4 or 5 hyperinflations for the same reason that, they voted politicians, promise freebies, pay for the freebies with printing money, currency collapses, then they start all over again, and then the cycle starts up again. And that's what I see happening to the U.S. Look, and actually there is a good thing that's happened to Argentina, because that's made people very resilient here to crises. So yes, there is still a lot of people in Argentina that will vote for politicians that give them freebies. But there's also, it's forced everybody else in the population, the productive people. It's forced the productive people to adapt, to be very resilient. So if Argentina has another hyperinflation, yes, it will be painful, but the economy here it will move on. It's actually very wired to the underground economy, which is a very healthy thing. Don't think of it like a bad thing. I mean, that's the free market, what's going on here. So Argentina is very resilient. The U.S. is not resilient. So if the U.S. had a hyperinflation, I don't know what would happen. You could have a Bolshevik communist revolution, or some kind of despot could easily come into power in the U.S. In the case of a hyperinflation. So it's a very scary. They're playing with fire here by printing this much currency in the U.S. because the people are going to look to a strong leader when that happens. And it's not going to be, I don't think it's going to be, given what we've seen over the past 2 years, it's not going to be Ron Paul or some kind of free market guy. They're going to be looking to Trotsky and his folks.
That's a great point, because the first thing, even though we like to use the word democracy when we talk about the U.S., it was really set up as a republic. It is a republic. Exactly. And the other thing with Argentina, when they had their hyperinflation, their local currency, the Argentine peso, people would get out of it and they would go into things like the U.S. dollar. And the point that I presume you're talking about is, if you're in the U.S. and the currency hyperinflates and you only have the U.S. dollar, what do you then go into? Is there an alternative?
Yes. And this is the dynamic, I think, because what you see in Argentina when they have hyperinflation, like I said, it's a monetary phenomenon. Inflation is always, it's a political phenomenon. Inflation doesn't happen as a natural consequence of the market. That's why there's never been a gold hyperinflation. Never heard of gold hyperinflation. Inflation is only a political. People have to understand this, because it's confusing. They think inflation is like a natural thing that just happens. It happens like 2% a year, but sometimes it gets out of control. No, inflation is 100% a political phenomenon. It's a politician's decision to print money. That's it. So what happened in Argentina is what you see is, you see people migrate to a superior form of money. Yes, in the context of fiat currencies, the dollar is a superior fiat currency. There's no question about that. But in the context of money overall, the dollar is not a superior form of money, while it may be a superior form of fiat currency. So what you see when the primary form of money gets debased and is junk, people will migrate to alternative, superior forms of money. In this case, in Argentina, yes, the dollar is just more convenient, so that's what people go to. But if the dollar, you'll see that same dynamic. You'll see the flight. You'll see the flight to a different type of money. And you will see the same thing happen in the U.S. So if the dollar is destroyed, they're going to flock. Where are they going to go to? I think they'll go to gold, silver, and Bitcoin, and maybe to a lesser degree, real estate. Real estate's not a good form of money. I guess you can use it as a store of value, but it's not very, I mean, it's better than, if the money is hyperinflating, yes, I'd rather have real estate, but I want money for money. I don't want money for housing. So yes, I think things will go into these they'll go into hard assets. That is where they're going to go.
Okay, and you mentioned Bitcoin, and I think you're going to have a lot of people who may agree with that. But why do you think Bitcoin is so different from other cryptocurrencies?
Oh, it's very simple, and it's also a very misunderstood thing. Bitcoin is the only cryptocurrency that people don't control. People control every other cryptocurrency from Ethereum on down, which means that Bitcoin is truly like digital gold in the sense that it's neutral and uncorruptible. Nobody can get together and say, you know what, we're going to change the inflation schedule of Bitcoin, or we're going to change the money supply of Bitcoin. It is, for all practical purposes, impossible. For every other cryptocurrency, there is a group of developers, insiders, and connected individuals that they can get together and change it. How many times has Ethereum changed its monetary policy? They change its monetary policy as often as the Fed changes its monetary policy. So that's the real gem of, and this is so confusing. I can see how people get distracted because you have like 7,000 cryptocurrencies, but the real innovation, the real revolution that happened in this industry is not from these other cryptocurrencies. They're in my view, they're like digital versions of Chuck E. Cheese tokens. They have fake scarce. It's artificial scarcity. They're as scarce as Chuck E. Cheese wants to make the tokens. But Bitcoin is different because nobody controls it. And how does nobody control it? Well, it takes a little bit of technical and economic understanding, but it's set up in an ingenious way that it's totally decentralized and completely resistant to capture. Yes, I know Elon Musk made some tweets a couple of days ago and it caused the price to crash. But Elon Musk can't control, he can't get together. He's the richest man in the world. He could not get together and change the protocol of Bitcoin. He really couldn't. So yes, he can influence the price a little bit, but he can't change the money supply. Nobody can change the money supply. So I think that's the essential difference between Bitcoin and the other cryptos. Bitcoin has real scarcity. The other cryptos have artificial scarcity.
Nick Giambruno, before we wrap up, could you let our listeners know more about how they can find your work?
Yes, you can go to nickgiambruno.com, and you can also see me on Twitter at Nick Giambruno.
Okay, Nick, again, we really thank you for your time, and I hope we can do this again soon.
Absolutely. Thank you.
That was Nick Giambruno, Chief Analyst at KC Research and its flagship advisory, the KC Report. More information about his work and his views on the economy, please visit www.kcresearch.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.